India's only show on corporate law, tax and audit matters.
India is always over-regulated and over-compliant. Most of our lives are spent in filling up forms.
Till now, the entire entrepreneurship startup community was like a pariah in the eyes of the government, the banking sector and all of that stuff.
Indian startups with most of their business in India would really like to be able to be in India for their listing. And the regulations before made that a little bit tough.
You need to have at least 20% as promoter holding in India, whereas early stage venture-backed companies which are run mostly by professionals as opposed to family businesses, you don't really have that kind of holding structure.
You have to dilute for more than 25%. Now as an early startup, I may want to dilute less than 25% to do price discovery.
Restrictions around profitability or minimum profitability, and also I thought to a great extent that the markets were looking for maturity too early.
A 3-year lock-in. Okay, and disclosure on use of proceeds. Now, which startup can give you disclosure on use of proceeds?
What we've seen in markets like the US and more mature markets is that people are giving you credit for growth.
It's vanity. I mean, who doesn't want to be listed on NASDAQ? And two is liquidity, right? What you need in any listing platform is not just the fact that you're listed. You need volume, you need exchange, you need pricing.
Well, it seems achche din are here for Indian startups and their investors. SEBI has proposed a new IPO route for startups. Now, an alternate capital raising platform with certain regulatory relaxations to keep young companies from listing abroad. Will it work? Prakash Nene of Multiples Alternate Asset Management and Manan Lahoty of Luthra join me to answer that question. Gentlemen, to both of you, a very warm welcome. Are there really that many young Indian companies that want to list abroad? I mean, in the last 5, 8, 10 years, I can think of, half a dozen companies that have maybe, given up the idea of listing here in India and preferred to list abroad.
This question is valid. Today, you are absolutely right. There are not too many people who may be ready to list on such kind of a platform. But you must understand that as far as this whole sector is concerned, this is just a 5 to 10 years old sector. The number of companies who, when you start up, you take at least 3, 4, 5 years to really grow to a certain level. So the opportunity to list was not available to them in the past. Barring 1 or 2 big ones, most of the startups are very, very new. They are there for the last 3 to 5 years. So I think this is the time now the momentum is gathering, and I do believe that as far as the listing is concerned, we will see more listing in the next few years.
Okay. Is India a less attractive market than the US, than Singapore? Do you have many clients coming to you and saying, I'd rather incorporate outside India so I can list outside India?
Regulatory framework-wise, yes. In a way, because the US has also come out with something called Jobs Act a few years ago. They've been coming out with various regulations on the Jobs Act, including Regulation A+, which came out very recently.
Yeah.
So in that sense, I think SEBI needs to be competitive. Also, given in sort of keep in mind that just last year, a few months ago, Indian companies were allowed for the first time after many years to list overseas without listing in India.
The depository receipt.
That's right, the DRS scheme.
Absolutely.
Yes.
Yeah, but I would like
so
to
you're
add
saying this is a response to that. If that sort of encourages, let's say the export of Indian capital markets, SEBI is doing counter efforts, to make sure that India looks as attractive, right? That's your point.
Regulatory framework-wise, yes.
So, I would like to add, this is not just the regulatory issue we have to look. We have to look overall what an entrepreneur would be looking forward to.
Sure.
He would be looking forward to an ecosystem which is recognizing him. Now, Silicon Valley and NASDAQ is the ecosystem where the new age entrepreneurs really connect very, very well, because that's the place most of them come from. And secondly, some of these situations in NASDAQ especially, you have a lot more liquidity. You have a lot more analyst coverage. There are opportunities for other listed entities in those exchanges to buy such exchange. That means there are a lot of M&A opportunity. If you take all those things into account, and then you're also externalizing yourself. I mean, you're not just depending on an Indian. So if your company is outside India, for example, it is incorporated outside India, listed on NASDAQ, these guys are very protective about their IP. So there are a variety of other angles, I would say, beyond the regulatory framework, which will come into the play.
Okay. India has national stock exchanges such as the BSE and the NSE, and exchanges for small and medium enterprises such as the BSE SME Exchange and NSE's Emerge that offer IPO and listing opportunities. The SME exchanges also host institutional trading platforms on which SMEs can list their securities but without an IPO. The size threshold is common to both, a maximum paid-up capital of 25 crore rupees. And in both cases, minimum promoter holdings apply with a post-listing lock-in period. To list on the ITP, a company must meet several other criteria, such as less than 10 years since incorporation and less than 100 crore rupees in revenue. And if the company exceeds a revenue of 300 crores or a market capitalization of 500 crores, it cannot continue being listed on the ITP. Now, in its discussion paper, SEBI has proposed modifying the institutional platform to allow capital raising with certain regulatory relaxations. Who will this platform cater to when you have an SME platform and an ITP platform?
See, a couple of things. First of all, the discussion paper says this is a modification of ITP platform, the one that you spoke about.
That currently already exists.
So it basically, yes, it is a modification of the current one. We'll have to see how the regulations are framed.
Okay.
But also you have to keep in mind that ITP platform has certain legal limitations. So for example, if your turnover exceeds 300 crores, you must delist from ITP.
Or if your market cap
goes
exceeds
beyond
500 crores. Yeah.
So are we talking about a company which is here only for some time period and then will eventually migrate? Or we're actually providing a new platform for companies which are larger than 500 crores to begin with, or larger than 300 crores of revenue to begin with, can list for a long period of time here.
Okay.
For which you will of course need a separate platform.
Yeah, but just I mean, if everything below 25 can list on the SME platform and everything above 25 can list on the main boards, I'm still not able to understand why we need a whole new platform. Why can't we adapt the SME model?
You're right. I mean, if you really ask me, you don't need a separate platform, but you need to carve out different kind of requirements of different sectors. So, for example, when you say an SME platform, primarily the connotation is only the SME kind of companies can list. So, what you can do...
But young companies, startups are also small, medium enterprises, aren't they?
No, I agree with you, but that's a question of course, nomenclature. I mean, let's not go into that. But if you ask me frankly, yes, it is possible to have one platform where all these requirements are taken care of. You can really have some carve-outs for different parts.
I mean, that said, I agree with you. I think instead of coming out with a whole new set of regulations on something like this, maybe SEBI could have modified SME or ITP or the main board itself.
Because it's relied on ITP, as you pointed out, right?
It does, but I think there are a couple of concerns that SEBI might have. Okay. One is that these are loss-making companies historically.
Right.
More importantly, there is no promoter being identified here. There is no promoter lockup of shares.
Right.
Also, there's a lot more flexibility in how IPO monies can be used. So all these three things are fairly important for SEBI to protect the retail investors. Now, SME market allows retail participation, but the threshold for retail participation is at least a minimum of 1 lakh rupees. Here, the threshold is 10 lakh rupees. So I think SEBI is slicing and dicing the market a little further to see that for these high-risk companies potentially, because they are in sectors, they have innovative business model as SEBI speaks about, the risk could be higher. So they need to protect the retail investors a bit more here than compared to the main board or SME.
All right, that's a good point to take a quick break on. When we come back from this commercial break, we'll talk about the specific relaxations that SEBI has proposed in this discussion paper. For instance, doing away with promoter categorization altogether. We'll talk about what that means right up next.